Good morning, everybody. Hopefully, y'all are having a great start to your week. Today is Monday, February 6th, and we got some pretty crazy stuff going on in the market. So, the top news pieces are the Chinese balloon getting popped or blown up after it had crossed the entire U.S. and they ended up taking it out over the Atlantic. Now we have rising tensions with China, so that is probably bearish for the markets. But what you will see, maybe, based on this, is a rise in gold. So whenever global tensions are going up, you'll usually see gold and other precious metals trading upward. But we're not seeing that today, and the reason for that is because we're seeing a decent rise in both treasury yields and for the dollar. So gold is basically where it ended on Friday, up just a tad, but not a lot, based on this Chinese balloon news. And if we look at the 10-year treasury yield, this ended up gapping up overnight. Currently, it is at 3.627, and it closed on Friday at 3.534. And if we look at the dollar DXY, this is also gapping up since Friday. And both of these are above where when Fed Chair Powell came out and spoke on Wednesday. So Wednesday was right here on the hourly chart, so we can zoom in. And we saw an immediate knee-jerk reaction downward for the dollar after Powell spoke, because he kind of hinted that they would be reducing the interest rate hikes to another 25 basis points for the next meeting. And then he actually kind of left it on the table that they might not raise rates at all. So he wasn't stern enough with the market, which is why you saw, a good rally towards the end of the week. And then we had the jobs report, the non-farm payrolls coming in extremely hot at 517,000 versus 230, I think, the month prior, and the expectations was 180. So huge surprise beat for the non-farm payrolls, which is why on Friday you saw a huge rise for the dollar and for the treasury yields. So the Fed now, since we have this hot labor market, has to cool off the labor market in order to tame inflation, because if they don't, then people can negotiate higher wages and you'll get a wage spiral to where people will have more money to spend on the same amount of goods, or even less goods if the supply chains continue to deteriorate. So that's why you're seeing a rising dollar, a rising yield, treasury yields, and that's why you're seeing the markets coming down right now. Okay. So that is my analysis for today. I am bearish to start the day. If we check on over on SPY, I'll give quick price analysis. Yeah, the mustache is gone. Yeah, that's also bearish if the mustache is gone. No, I'm just kidding. Mustache is, I was trying to trim it on Friday or Saturday, and I ended up cutting a little bit too close. Little mishap. I might end up just being clean shaven anyway until the bull market is back. We'll flip back and forth between growing the mustache and then shaving it off when we have a bull market or a bear market. How do y'all feel about that? Definitely bearish if the mustache is gone. Yeah, for sure. All right. Anyway, so looking at the price analysis right now, I did this in yesterday's video. I don't know my days right now. I'm tripping on low sleep, but my days are just kind of merging together at the moment. We know today's Monday, though, right? Hopefully. In Escanor? Not sure what that is. Anyway, so I'm going to link this for y'all to watch later. This is my weekly analysis video. And I'll pin this in the comment instead of the premium Discord. I should have actually linked it, huh? That would have helped. weekly analysis video. So go and watch that one later. That'll give you my kind of outlook for this week, what's going on. And for right now, we have about 4 minutes until the market opens. So I want to do a little bit of a recap of last week's trading. It was actually a pretty decent week for me. I ended up reaching my goal of making $100 a day. For each day, 175 on Wednesday. Actually missed on Thursday, I guess, at 77. And then Friday, I made 136. And if we go back to January, the calendar, I ended up making 110, making 237. So hopefully we can keep this trend going. Right now, I do have some bearish positions open for the Qs because I did expect the Treasury rates to keep going up after we saw the hot jobs report. Whether, it's fake or not, we can't really confirm if the data is cooked, as Maverick of Wall Street would like to say. But it does seem kind of shady that it came in so much higher than expectations and so much higher than it did the month before, with no kind of major catalyst that would set that off. But, we just got to work with what we got. Even if the data is manipulated, we got to trade around it. But checking out the Qs, right now we're trading at 303. I'm assuming that it's going to be below 308, and I set my expiration date for the 8th. I'm going to try to see. I opened this on some economic data that was coming out. I'm just not exactly remembering what it was that was on Wednesday. So we have Fed member Williams speaking on Wednesday, Barr speaking on Wednesday. I guess we don't have any news, so maybe I was thinking of the initial jobless claims Thursday and trading before that. But we do have Jerome Powell speaking tomorrow, Tuesday, at 12:40 p.m. So we'll see if he cools off the market after, setting it ablaze and sending it up so much on Wednesday. We'll see if he walks back some of the comments that he gave, or if he feeds into that narrative possibly and continues to perpetuate the market up. But right now, let me find the speech. Powell speech Tuesday. There's actually a calendar that has all of this that I'm going to link here in the chat. Going all in on puts because the stash is gone. Yeah. All right, so that link has all the different Fed meetings and what the topic is that they're talking about too. So for tomorrow, Fed Chair Powell is going to be giving a speech regarding Economic Club of Washington. So I'm not really sure what the subject is, but I guess it's just a conversation with one of the people of Washington, David Rubenstein. And then it has the little link to it, so you can always watch it. Anyway, bell just rang. Currently trading at 409.88 for SPY, 60 on the RSI. So we are starting bullish in terms of relative strength index. We'll see if we end up crossing that 410.79 mark, though. That'll be a pretty pivotal point in the market, I would think. And if we're looking at these QQQ put debit spreads right now, they're trading at 70 when I bought these at 40. So a nice little 75% profit, up $180. Gonna have to wait for the bid ask on it to settle down. Right now, the bid is 55. The ask is 86. So a 30-cent bid ask spread. So we'll wait on it. And we'll keep an eye on the Qs. My assumption is that it's just going to be below 308 by Wednesday. Right now it's trading at 304, so it does have some decent time to it. I've had a lot of people asking me when to take profits on debit spreads, credit spreads, and the like. And the best way, there's no set in stone method of closing spread options, of taking profits at 50% or cutting losses at 20%. I don't do that. I do it based on where the stock is trading in relation to the strike prices that I chose and how confident I am and what are the odds of the stock rebounding. So for this one, I'm assuming that it'll be above or below 308. So if I think that it could go back above 308 in the next couple of days, I would want to close it right now, right? So right now, these are trading for 70-ish. I might be able to get rid of them at 65. I'm still bearish for today, so I'm pretty confident in continuing to hold this. My only concern is the technical analysis that we're at 60 RSI. That is bullish. So I'm hesitant to, continue to hold this. We could also just take profits on half. Right now, SPY is hitting that 410.79 mark, so we'll see if we get rejected or not. But definitely bullish start to the open. Would I have sent a friend request on Discord when I try to join the server? Yeah, that's probably a spammer. There's a lot of people that are impersonating me over on the Discord, unfortunately. Can't really do much about it. But yeah, I most likely will not send you a friend request. If you do get a message from me, which has been pretty rare as of recently because I haven't had time, it'll be like an introduction message to the Discord server. Something along the lines of, let's see if I can find it. Something along the lines of this. So thanks for joining. This is my one and only account, Everything Options, hashtag 0006. That is my Discord username. And any variation of that, whether it be the number or if it's Greg instead of Everything Options, that is not me and somebody that's trying to steal your bag. Yeah, no problem, Micah. Anyone else? Robinhood slow and laggy? I'm not really experiencing that personally. QQQ is making its way back up though, 304.50. I'm gonna try to get out of these at 65 and just take my profits and run with it. Just because we're bullish, I don't want to end up having to bag hold it. But I closed them at 402, so I think I got a little bit more than I asked, but we'll see. Let me type this in the trade alerts tab on the premium Discord. So if y'all want to see the trades that I make that are not on this live session, you can always visit the premium Discord. We do have a free trial for 1 week whenever you join. Closing options alerts, premium 101, freemium. Just took profits on the QQQ, put debit spread. This expires the 8th to 8 at 402 divided by 6, 67 cents each, so I got more than I asked. All right, and our strike prices on that were 408, 409. So that was my assumption that it would be below 408 on Wednesday. Still could happen, but I'd rather just book the profits now. There we go. And I will straight away log that over in my trading journal right quickly. Trying to find the reason that I opened it. Not really seeing it anywhere right now. I think it was just based on the 10-year treasury rate. So that was just a fundamentals-based trade. So I like to tag my trades as to why I opened them. So this was a fundamental trade. So this will go in green. It already is in green. I closed this today, which is 2.6. And I closed them at 67 cents a piece. So I made $162 for that trade. So not a bad start to the month. So far up by $550. Let's see. This is measuring by the open date instead of the close date. I might have to fix that later. But yeah. The Robinhood bid-ask spread has been 100. Jesus Christ. Yeah, Robinhood is very predatory with their bid-ask spread. I wish they would be more transparent with their bid-ask spread and like telling people, hey, this obviously it would be counterintuitive and probably push people away from their platform. But I really wish that they would have some kind of explanation as to how you can lose money based on wider bid-ask spreads. And this isn't just Robinhood, a problem with Robinhood. It's also a problem with low volume stocks. This is something that I was talking about in my coaching session yesterday, where somebody was asking me, should I trade options on stocks like QYLD? So this is, if y'all don't know, this is a cover call fund. And I said no. And the reason why I don't think you should trade options on QYLD is because there's not a lot of volume for QYLD. It's not a very popular stock to trade. And the less popular that a stock is, the less volume that it's going to receive and the wider your bid-ask spread is going to be. And you can think of your bid-ask spread as basically taking your money. The wider your bid-ask spread, the more that you're going to have to negotiate not in your favor. Not sure how to reword that. But you have to, in order to get filled immediately, you want to sell at the bid, buy the ask, which is counterintuitive. As a person selling it, you want to get the highest price possible, but in order to get that order filled, you have to sell it at the bid price, which is the lowest price possible. And if you're buying the option, then you have to pay the highest price possible, which is the ask. So the wider the bid-ask spread, the more that's going to eat into your profits, basically. And again, QYLD and these low volume stocks, I just would avoid trading options on. Small caps, mid caps, you can trade them. Again, lower volume on those. I would mostly stick with SPY, QQQ, the big indexes, DIA, and then I would stick with mega cap and large cap companies. Yes, Powell is speaking tomorrow, so we'll see if he walks back some of the comments that he gave on Wednesday of last week or not. That'll be interesting for sure. But yeah, now that I made $162 today, I might not even have to trade for the rest of the day, but we'll see. If we can spot any decent opportunities, I want to find a good opportunity to take instead of just walking right into it. We definitely got rejected at that $410.79 resistance that I had set up. So we could take a short position, a call credit spread, assuming that it'll be below that. But considering that we're above 50 on the RSI, that's what's kind of holding me back from opening this trade right away. We're looking at the 10-year Treasury yield. This is still up, gapped up overnight. And looking at the dollar index, DXY, both of these fundamentally are telling me that today is going to be bearish. We already did sell off a good bit overnight, or I guess over the weekend, down 0.5%. So we could take a neutral trade maybe. Might not be a bad idea. And I would say we'd probably stay below 411, yes, but I don't want to take on that extra risk of being so close to the strike price. If we can do 412 or 413, I think that could be a more secure trade. And of course, the more secure a trade is, the more likely it is to work out, the less credit that you're going to get for a credit spread. And that's just the name of the game. The less risk you take on, the less reward you're going to receive. But if we're assuming that SPY will be below $412 at the end of today, this trade is going to pay us currently 24 cents in credit. That's not a bad deal. I would want more confirmation of seeing like 50 RSI before opening this. But 25 cents in credit is not a bad deal at all. Let's see. This trade, I'd be willing to put up 200, I guess, 225. So I'd open 3 of these trades. The bid just dropped on me from 25 to 21 right now, and we're definitely headed back to 50 on the RSI. All right, let me try to open that. Trying to open at 22, that got filled. So just open that call credit spread, assuming that will be below 412, which is close to where we closed on Friday anyway. So I'd say there's a decent chance that that is going to hold below. So let me type in the new options alert. So it's a call credit spread. I can't type right now. P1F. All right. Just opened a new SPY call credit spread that expires today. So this is a day trade, 2/6 expiration. And I got them at 22 each. All right. Sweet. Treasury yields and dollar gapped up over the weekend, and Powell is speaking again tomorrow. So assuming we will be below Friday's close by end of today. But yeah, let's see what the Friday close was, just to confirm. Was close at 412.36. Right, let's see, 3:55 p.m. closed 412.36. Sweet. All right, we're back to 50 RSI, so basically what my expectations were. Head back to Robinhood, see if we've made any profit on the trade. Probably not, just because Robinhood and their bid-ask spreads actually made a cool $9, $3 so far. So, not bad entry, I guess. Not a bad entry at all. Problem is I only got like $60 in credit, so wasn't that great, but we'll keep watch. U.S. plans 200% tariff on Russian aluminum as soon as this week. Great, more tariffs. More economic warfare, gotta love it. Russian Defense Ministry said Russia Army has gained control of, I'm not even going to try to pronounce that, some region in Ukraine, I'm assuming. And not really much else in terms of news right now, but we just bounced on the 50 RSI. So we'll see if this continues to hold above 50 RSI. If it does, then probably better to close out of that call credit spread than risk continuing to go up and possibly go back to where we closed on Friday. Bearish today, yeah, I just did the call credit spread, assuming that will be below Friday's closing price at 412. What am I thinking of Tesla? Let's see, it's trading at 197 right now. There's a resistance right around $198. I thought that it would go up after the EV tax credit news, and they ended up raising their prices by another $1,000. So I would have thought that that would have been bullish, but But given, the market pullback that we're experiencing today, I would be a little bit less bullish on it. It is up 3% on the day. I'm actually thinking about selling part of my Tesla position that I have open. Like I own shares for the long term, but I do kind of manage that to some extent because, cash is everything right now. If you want to be able to buy stocks at a discount, then cash is the best place to be. And considering that Tesla has gone from $100 to nearly $200 in a matter of 4 or 5 weeks, I would say that this is a decent opportunity to take profits. But we'll see, right? Not the perfect timer of the market. I wish that I was a little bit better at it, but I think that it's a better opportunity to take profits than continue to hold it. Bullish on Uber, PayPal, and Diz. I haven't really come up with much of analysis for these 3 stocks just yet. I think with Disney, they're expecting margins to shrink, which is interesting because I think Disney Plus is making up more and more of their earnings. So I would think that margins would actually increase for Disney because Disney Plus is a software service. So more of their money is coming from a software service than their parks, which has lower overhead to it, right? It's easy to write some code and not easy to write it, but it's more manageable, right? Anyway, so Disney, right now, I think if they are seeing increasing margins, which is what I expect, I think that this could probably hold 106, but it really depends on tomorrow too, right? We have Jay Powell coming out and speaking, so if he comes in more hawkish than expected, then we might see Disney and the rest of the market dump, which could send this below 106 before the earnings, which is scheduled for, scheduled for 2/8. So this is scheduled for Wednesday. So I would probably open this on Tuesday after Powell's speech, just to kind of mitigate any risk of the markets falling on the Powell speech. So I'm probably not going to open any earnings trade until after Powell speaks. I might open some just in case it is bullish, but I would take very small positions going into it. Yeah, Cam said that he's selling his possession on Tesla as well. Yeah, I mean, I'm probably only going to cut like 10% of the position. It's not going to be like a major sell. But, just managing a little bit here and there, it never really hurts. Like if it goes up another 10, 20%, then am I really going to miss out that much when I still have 90% of the stake that I did before? It's really not going to make that much of a difference. So I guess I'll go over to Fidelity and do that. I'd rather sell the shares over on Fidelity than the ones that I have on Robinhood, just because the position in Fidelity is a little bit bigger. I think I have 25 or 30 shares on Fidelity, whereas I have 5 shares that I have in Robinhood. And that'll help to pay for the QQQX trades that I've been making. Well, let's see. Tesla. So I've got 35 shares here, 5 shares on Robinhood for a total of 40 shares. So I'm just going to sell 4 of them, collect like $800 in cash, and hold the rest. The call credit spreads have gained 20% since I opened them. That's good. Yeah, you're going to see a lot of profit taking, and this could lead to a cycle of bearishness. So I was watching Maverick of Wall Street this morning with I'm one of his channel members where subscribe to his channel for $10 a month, and he was talking about the cycle of a bear market rally, and I'll explain it after I put this trade alert. Just sold 4 shares Tesla. First in, first out, or LIFO, last in, first out. I really am not good with taxes, so I couldn't really give any advice pertaining to that. But let's see. I wanted to talk about what Maverick was mentioning in his video. Maverick of Wall Street. Gotta love ads. This is the wrong video. But basically the cycle is you will get short covering. So all the people that were shorting the markets on the way down will start to buy back their shares in order to take profits. Whoops. Where the heck did it go? All right. So there's short covering where short sellers are taking their profits, and you get what's known as a gamma squeeze. After that, after the shorts start to cover, they're buying the shares back from their broker. And then you have a gamma squeeze, which is where usually retail and institutions start to buy out of the money call options in anticipation of the markets going up. And in order to hedge these positions, market makers, the people that are selling these options, have to buy the shares, since whenever you sell a call option, you're agreeing to sell 100 shares of the stock. So you have the short covering, buying pressure. You have the gamma squeeze buying pressure where, like I said, people start buying out of the money calls and the market makers have to hedge. And then you have quant funds. He said that they usually start buying after like a cross of 100 moving average, 200 moving average, or some sort of technical, like we saw with the trend line that was headed down. So a lot of quants start to buy. And then finally, the last person that always gets left holding the bag is retail traders. So they buy the tail end of the rally, and then the markets end up swinging back the other direction, depending on, what kind of economic news, what kind of data is coming out. So this is all really kind of data dependent for the markets to start selling off. And what really triggered us to start selling off was the non-farm payrolls that came out on Friday. So we're starting to see a little bit of a pullback, and then you might see the opposite, to where now smart money, quote unquote, is starting to take profits, and then you would have a negative gamma squeeze where people start to buy puts in anticipation of the markets continuing to go down. Then the quant funds might start to sell off once we go below the 100 or 200 moving average, and then retail is the last ones to sell out at the bottom of the bear market, basically, and then it recycles. But right now, SPY's trading at 410. Not seeing much price action today so far. Just kind of finding a balance at the moment. We are above 50 on the RSI still, so we'll have to keep note of that. That is, I'd say, the main metric that I would use to see if we're bullish or bearish for today. Since we don't have any economic data that's coming out, that's probably what the market's going to rely on, is technical analysis. But yeah, we got a solid balance on 50 for the RSI, so that does tell me we could be bullish, but not quite going up just yet. Could have opened these for a little bit more, I guess. They were trading at 32 on an open and then dropped to 25 after the first 10 minutes, so kind of wish I got more credit on it. I tried to get it at 25, but my hands just ain't quick enough. Gotta have quick hands with this volatile market. Anyway, let's head on over to investing.com, see if there's any news coming out. U.S. stocks are falling as investors await Fed Chair Powell speaking tomorrow. You also have the Chinese tensions rising, which is not great for the market. Crude is edging higher on optimism over China's demand growth, if they stay open, that is. Global airline traffic last year rebounds to over half of pre-pandemic levels. I'm surprised that it hasn't rebounded completely, especially with COVID getting canceled as of May 11th. Let's see. Fed fears Tyson Foods, Dow Jones weekly preview, balloon pop, the Chinese balloon. Yeah, so not really much other news that's coming out right now. But the three stocks for earnings this week are going to be Uber, PayPal, and Disney. I want to take a bullish position before, and I'm thinking about taking the bullish position on Disney. Uber actually might be a decent opportunity too. I would say Uber is a better long-term based on their cash flow statement. They were cash flow positive, which is shocking to me. I would have thought that they would be burning money like crazy and on a very low cash pile, but after looking at it yesterday, their cash pile is actually pretty good. They have like $8 billion in cash, and they were making, I think, like $300 million. They added $300 million in cash from operating income. So I would say that's pretty bullish long term. But even though that is bullish, Uber is trading pretty close to a 52-week high. Right now it's trading at 33, and the 52-week high was 42.5. And if you compare this to other growth and tech names, that is much higher than something like, I don't know, Tesla probably. Yeah, this is down from 400 almost to 195, so down like 50% still. Nvidia's in a little bit of a different sector, but they're down from 300 to 212, so they're down about 30%. What else can we look at? Meta. I wouldn't compare them to Meta since they're not. I don't know. Maybe we could compare them to Meta. 189 versus 238. So that one's actually decently high compared to the 52-week range. And that huge gap up leaves some room for downside, but they had an okay earnings report, 176 earnings per share versus 212 was expected. This is up from the quarter before at 164, so that is slightly bullish. But Meta's been spending money like a drunk sailor trying to trying to work on their metaverse. I think that It's a worthwhile venture, just not for their company. I think that Meta's kind of lost trust with Zuckerberg at the helm. I really wish that they would get rid of Zuckerberg. I feel like the trust in Zuckerberg has diminished to like almost nothing. Nobody really likes Zuckerberg as a CEO because he's been in court pretty much all the time, and that's common among a lot of CEOs too, especially big names like that. Elon Musk is always in court too, but I'm not really sure what the difference is between Elon Musk and Zuckerberg. I guess it's just their personalities. One seems more trustworthy than the other. I'm not really sure what distinguishes that though. But let's see. SPY's trading at 410.30, so catching a bounce. Or probably at like 60 RSI, so I might end up closing out soon and taking a loss for the call credit spread. Right now they're trading at 24, so it's only a $6 loss. Yeah. I'd rather reduce the size of my losses, especially after taking $170 in profit this morning, and call it a day. The bid is 25, the ask is 28. So we have to sell at the all right, we got a credit to open this. We're buying it back to close it, so we have to go with the bid or the ask price, which is 28 right now. And I open 3 of these at 22, so that would be about an $18 loss. Obviously, it could turn around at any moment, but I'd rather sacrifice the $18 loss than end up much worse. Good morning, Julio. Welcome. Closing options alerts. Premium 101. Premium. Oh, crap. Just cut losses on the 412, 413 SPY call credit spread that expires today, 26 at 0.84 over 3, 28, 28 each. SPY over 60 RSI with no econ news data today. Trend might continue up. Good morning. Alright, so I'll log that into the trade book. That'll be a $18 loss, so I'll end the day up $150 or so, which is still a good day. Still above my $100 goal that I want. SPY. Oh, crap. Call. Whoops. Credit spread. This is a bearish. Neutral strategy. Expiration date was today. So 0 DTE in a day trade. The strike price I chose were 413, 412. Just 3 of them, so I didn't risk a lot. I open them at 22, close them at 26. Actually, put that in the wrong spot. 22, 26. All right. Sweet. So actually only a $12 loss. Not too... Oh, sorry, that's supposed to be 28. So $18 loss. Didn't look like we made it back to 410.79, but again, considering we're above 50 on the RSI, I didn't want to take my chances. We got CB Employment Trends Index for January. So we actually did have some data coming out today. I didn't even recognize that. Let's head on over to the economic calendar. So this is another jobs report after the Friday jobs report. So this will be telling whether the jobs report was fabricated or not, with the 517,000 jobs added in January somehow, whereas the month prior was 217 and the expected was like 180,000. But looking at the Employment Trends Index, I haven't really studied this one too much, so you'll have to bear with me in understanding how this works. 8 labor market indicators listed below, aggregated in employment trends, percentage of respondents who said jobs are hard to get, initial claims, employment, insurance, percentage of firms. Okay, so it's just like a conglomerate of different employment data. A higher than expected reading should be taken as bullish for the US dollar. A lower than expected should be taken as negative or bearish for the US dollar. Let's look at a shorter time frame. This has been pretty flat, so it's kind of hard to really judge it. Let's look at the last, say, all right, so whenever this is going up, that means more jobs are being added, basically. So looking at the last year, not many more jobs have been added, but it's basically just flat for the past year since the Fed started to raise rates. Interesting enough, it is up over the last 2 years, and it does kind of seem to be rising, but after the latest jobs report, I would kind of expect that. Did the mustache scare the baby? No, the mustache wasn't scaring the baby, but it was capturing all my food that I would eat, and then if I was, touching her face, kissing her face and stuff, then it would end up on her. So I decided to shave it after I was trying to trim it down, actually, and then I messed up the trim, so ended up just shaving it off. People also say it's the start to the bear market and my mustache is gone, so a few things that it could be. Yeah. We just got her weight in today, which is nice. She's finally gaining weight. She was down about 10%. Her weight's like a stock. It was down 10% in the first couple of days, but she's regained, I think, like 3 or 4% of that. So finally got her feeding right, and we're working on sleeping right now. Didn't realize that they need to basically be put to sleep as soon as they are done feeding. After like 30, 45 minutes, they need to go right back to sleep. She was staying awake for like an hour or two at a time. So she wasn't getting enough sleep, so she was cranky all the time. But now that we've kind of got her in a little bit of a sleeping routine, at least, she seems a little more calm. Thank God. That'll help me sleep at night too. But yeah, not really much going on. Markets are up but flat since the open, down from Friday. Checking in on the 10-year Treasury rate. The reason why I wanted to open this trade. It's still gapped up overnight, still holding that gap. So I would say that would continue to be bearish. Maybe we can make a swing trade for Powell's speech tomorrow. It's just so difficult to really predict where we're going to be tomorrow, but I don't think we have any economic news coming out or economic data scheduled for tomorrow. Let me just double check because I was wrong this morning with the employment trends. We have export imports, so that'll change where the dollar is trading a little bit. It hasn't been having much effect. You have the Red Book coming out at 8:55, and then Powell speaking at 12:40. So let's try to see if we can open a swing trade expiring tomorrow. If the 10-year Treasury rate holds up from where we closed on Friday, I would say that SPY would stay below. We could call it 413, 414. I would be comfortable with 414. I just want to make sure that I get an ample credit for it. Like, if they're not going to pay me enough credit, then it's not worth it. But it looks like we got rejected at 410.79 again. But I'm going to set the expiration date to tomorrow. After Fed Chair Powell's speech. Assuming under 414, we're going to get paid 23 cents in credit. That's kind of low for a 1 day to expiration option. If you go with 413, you get 28 cents. So 28 cents versus 23 cents. That's pretty decent difference. So I'll take that instead. I'll take the lower strike price, higher credit, take on the little bit of extra risk. And right now, I'll risk 300 for it. So this is assuming that Fed Chair Powell could walk back some of the remarks that he gave Wednesday, and that would keep the Treasury rates high like they gapped up since Friday, which would probably send the markets down. So this is a swing trade. Oops, can't type. Just opened a new SPY call credit spread expiring tomorrow, which is the 7th at 29 each. I can't freaking select this. Expiration date again, and then strike prices. There we go. Powell speech tomorrow at 12:20. Expecting him to walk back some of the remarks from Fed meeting last Wednesday that sent the markets up, which should result in Treasury rates staying elevated and keeping SPY down. All right. Yeah, it could trade flat into the speech too. It might be undecided. Since we already sold off, a good 0.5, 0.6%, it could just end up trading flat between now and then. It could already be priced in. But we are seeing a decent drop now, so I kind of wish that I had held that call credit spread, assuming under 412 today. But since we got that 413, that could make up for it. But we just dipped below 50 on the RSI, so that could be a trigger for the algos to start selling off. You could even make a better trade out of it with QQQ instead of SPY because there are more sensitive to interest rates going up. But I generally like to trade SPY just because I already have the price levels drawn up where I think it'll stay below. Could do a quick price analysis on QQQ, but we already have the SPY trade, so not 100% necessary. All right, though. That's probably all the trades that I'll make for today. Not sure if I'll open anything else, but I'll make sure to log this so I don't forget later on. February log. Today, SPY, call, whoops, credit, bearish, neutral, to 7 expiration date. Excuse me, sorry. Strike prices 414, 413. 4 of them that I got for 29 cents each. All right, we'll see how that trade ends up playing out. This one I closed it by myself. This was a fundamental based trade, so this will be green. And then this one is a econ data trade. Not really data, but just a Fed event, I guess, would be more of a better descriptor of what this is. But I'll just categorize it as econ data. You could also categorize it as fundamentals too. Yeah, no problem, Donald. Thanks for watching us. Oh, man. But yeah, that's all the trades that I'll make today. And I guess since I'll be here for 2 hours, we can just answer questions for the rest of the time. So I'll move this over yonder. Keep SPY on the right so we can monitor where it's trading. I'll monitor from here so it's a little bit more clear. And y'all can start asking questions. I wonder if I can start a Q&A. Answering questions till 11:30. Never used this feature before, so we'll have to see exactly how this works. Or you can ask about stocks. It doesn't have to be specific options related. If you want like a quick technical analysis on a stock or fundamental analysis, just let me know. And we'll just keep monitoring SPY. Currently at 409.10. So back below where we opened at 409.70. QQQ is still basically where it was at open. So that might mean more downside for the Qs right now. When would you close the credit spread if it went sideways? So if SPY continues to trade flat for today, I would want to close it at the bottom of the range that it sets up. So let's say that the range today is $410.79 to the low of today at 408.39, right? So if we continue to trade flat in that 408 to $410, $411 almost price range, I would want to close it closer to that 408 price level and as close to expiration as possible. So if I want to close this today, if I, change my mind on Fed Chair Powell possibly coming in dovish or bullish tomorrow, I would want to close this closer to the bottom of the range at 408 than, up towards $411. The lower that this stock is with a call credit spread, the more profit that you're going to make if you're closing out of it early. If you're planning to close out of it early. You could also close it based on prices and your best estimate of what is the likelihood of the option working out or not. I would say there's, I guess it's kind of hard to say because I don't know what Powell is going to come out like tomorrow. I would have to reassess that after his speech. But let's say that this trade is going for 10 to 15 before Powell's speech tomorrow. At that point, there's not that much more money I can make out of this, right? I have 4 of them, so that would be an extra $50 to $75 in credit that I would get. But if it's trading at 10 to 15 and I opened it almost at 30, that means I would have already taken between $60 and $80 of profit. So I've realized most of my profits before Fed Chair Powell came out to speak. So I would want to reduce my risk and get out of that trade, just in case I'm wrong and Powell comes in bullish tomorrow. That's when I would close it. So 2 ways of closing it: closer to the bottom of the range, or if it's trading between 10 and 15. Excuse me. But right now we're trading below 409, so we could be retesting today's low at 408.39 in the pre-market. VIX is starting to creep up 6.5% today at 1950. Still trading very low, I would say. 10-year Treasury rate still holding. The dollar is actually continuing to push up, interesting enough. That could actually be, if we want to make a hedge for tomorrow, if we think that Fed Chair Powell could just give out the same kind of sentiment that he did in Wednesday's speech, gold would be a decent long position. Whenever the dollar comes back down, gold will push back up. They have an inverse correlation with one another. So a gold put credit spread or maybe a call debit spread might not be a horrible idea just as a hedge in case we're wrong. Now, what price we're going to be above, that's a little bit tricky, I would say. 174, I would say, is easy. I would probably want to open this towards the end of today, though. I'd rather wait it out a little bit and make that decision then if the dollar just keeps pushing up today. So I'll set a reminder to myself to check gold at the end of today. Otherwise, I'll probably forget. Set a reminder to check GLD at 3 p.m. Cool. That'll make my life a little bit easier. But yeah, right now, only have a few positions open. SPY, NVIDIA, the MAPS call that's at max loss, and then the Bank of America put, that's still not doing too hot. Have until 1/17 expiration of 2025, so a long way out. We're still in 2023, so 2-year leaps, and I think that banks are going to have some trouble this year with the higher interest rates and the lower demand that we're going to see in housing. It's going to negatively impact the revenue, which ultimately negatively impacts their earnings. I'll get rid of the pinned comment. There we go. So we have the Q&A going on until 11:30. So we have about an hour for y'all to ask questions and keep an eye on the markets. Put this over here so I can keep monitoring and keep the Q&A open. There we go. That's better. Let's see what the true range or whatever is. True range indicator. You could also use the VIX rule of 16. It'll probably give you the same thing. But true range indicator is saying that the average move is $3.76 in either direction. As of right now, if you go by VIX and the rule of 16, what you'll do is you'll look at the price of the VIX currently at 1960. You divide that by 16, and the expected move today would just be $1.22 actually, but the true range indicator is saying 148, so I guess the true range indicator is a little bit more lenient, more forgiving, I guess. Oh, this is the VIX, that's why. The true range indicator on SPY is 385. Okay, so this is a percentage. 19.6 over 16 is 1.225%. 1.225. SPY is trading at around 408. So the expected range based on the rule of 16 is $5. The true range is saying 385. So the true range actually underestimates it based on the VIX reading, interesting enough. One more thing that I wanted to check out for the earnings trades for this week is implied volatility percentile. So let me get rid of these studies. Don't need the RSI or the MACD. I've already covered those in Sunday's video, but I do want to check out IVP, which is implied volatility percentile. So this will show you where implied volatility is relative to the last year of trading if you're looking at the yearly chart. Disney is at 55 IVP, so 45% of the time implied volatility has been higher. Usually whenever they're having an earnings report, this is trading at 98, the last one. The one before that, it was trading at 90 IVP, basically 100 IVP, the earnings before that. And then the one previous was roughly where we're at right now, it seems like. And we actually had a gap up whenever IVP was that low. So I'm going to be opening a put credit spread for Disney after Powell's speech tomorrow, just in case we're bearish. I don't want to take on the risk of opening it before. But I would think that we would stay above 106 and almost certainly above 104. Considering that IVP is so low relative to past earnings reports, we could do a call, but we would have to do it in the money call option. And for Disney trading at 108, that would be pretty expensive. So I don't think it's worth it. For PayPal, currently trading at 52 IVP. Last quarter, it was trading at 90 IVP. The one before that, 95. The quarter before that, 80 IVP. That's as far as we can go back on earnings. So relatively low for an earnings report. PayPal, it's hard to say. I think Wall Street was expecting their margins to increase. So how much more earnings they're getting out of every dollar they make in revenue. But I think with PayPal, it's harder for them to increase their earnings. They're not charging more of a fee or anything, so that's not really going to change their margins. And with the rise of the dollar over the past year, if you look at the Dixie, this is up from 95 to 103. This weighs more negatively. Since this is a transaction-based company, they have to do foreign exchange if you're giving PayPal money from one country to another country. So that would weigh negatively on their margins instead of positively. But if we go back to my earnings analysis, I think they were expecting margins to improve. And we'll see how much they're expected to improve. 10%. So earnings per share is expected to come in 30% better year over year versus 20% better for revenue. So that means that they're expecting margins to improve by about 10%. And I think that is a fat no. With 52 IVP, let's see. It is trading pretty far off of its 1-year high at 129 versus 82 right now. So that would be $50 over 130, about 38%. So it has fallen a decent bit. So I'd rather do a call credit spread than open a put. Especially, it is kind of a cheaper stock since it's only trading at 82, but this one I would probably open before the Fed meeting, or not the Fed meeting, but Powell's speech tomorrow, and probably assume 83 you're cutting it close, 88 you're not going to get that much credit. So we might not have a setup here. Unless we do a put debit spread, assuming that their earnings is going to be really bad. The problem with that, let's see, is that this is one of those companies that's made a lot of profit over the last couple of years, especially because it's a tech name. So if we go back like 3 years in their earnings, they were making 69-cent earnings per share, and they went all the way up to 122 earnings per share at the peak. So they've made a lot of cash over the last few years, which gives them leverage to do share buybacks and to do employee stock compensation, which they can use as a way to boost their earnings per share on a non-GAAP basis. So they can basically give Wall Street whatever earnings per share they want to see. But going back to the notes, Wall Street is expecting 122 earnings per share versus 87 a quarter ago and 92 a year ago. And historically, they've done 94-cent earnings per share. So they are expected to do really well in terms of their average and last year's earnings per share. And I think this will be the second best earnings per share that they've posted over the last 3 years. Now, again, it's possible that they can do this because of how much money they've saved up. Let's see if they're doing any share buybacks. PayPal share buyback. Stock repurchase program, $4 billion starting in 2022, August of 2022. So, yeah, this is one of those companies that's taken advantage of the money that they've made over the last few years and boosting their earnings per share in that way. So it's harder to make a trade on that. We could say that it'll be below the 83 mark. The next mark is 88. We could use the Friday close. At 3 p.m., the close was 85.50. So we could either do a call credit spread assuming that it'll be below 86, or we could do a put debit spread assuming that this will be below 83. So the closer you are in the strike price, the less risk that you'll take on. I think I'd rather take a lower risk trade than higher, just because, that leverage that they have with their share buybacks. I'd rather take on the lower risk trade than the higher. Mark this as blue. And we'll do a put debit spread assuming that they'll be under 83. When is their earnings, though? That's important to note, too. Their earnings is scheduled for 2/5. Wait a minute. Sorry, 2/9. So today's the 6th. Tomorrow is the 7th. Wednesday is the 3rd. This will be all the way on Thursday. So we still have a while to do that. All right, so I'm going to look for a put debit spread that expires next week on this PYPL. February 17th expiration date. Since they're reporting on Thursday, I always like to give myself an extra week in case, just to avoid max loss in case I'm wrong. And if we do 84, 83 strike prices, we're paying 65 to make 35 for next week's expiration. That's based on the ask price, though. Let's see. Bid is 45, the ask is 70. We could probably get it filled at 60. That means we risk 60 to make 40, which is not bad. If we cut the expiration date to this week, though, this Friday, the 10th, that one we're risking the same. Actually, no, a little bit less, but roughly the same. I'd rather give myself that extra week, I think. Especially if the markets start to really sell off over the next couple weeks. So 217 expiration. This trade I'd probably only put down like $200 or so. So I'll open 4 of these at 60. Not getting filled at the moment. Oh, there we go. Sweet. New options alert. Swing trade. Just opened a new PayPal put debit spread that expires 2/17, and I opened them at 0.60 each. Strike prices. All right. PayPal earnings Thursday. Wall Street expects, well, that's not Wall Street. Expects margins to improve 10% year over year, while the dollar is going up, which will cost them more for foreign exchange. So likely a miss for margins and EPS, but they have made decent profits the last few years and started a buyback program, stock buyback program, August of 2022, which they can use to boost their non-GAAP EPS. So that's why I didn't put a lot of money on it. But yeah, open that PayPal trade. What is the range indicator? So the true range indicator, it tells you what is the expected range based on the time frame that you have. So if we go to SPY and pull that back up, go to the studies, edit, true range indicator. So this tells you that the expected range is about $4.25 in either direction. And it's based on the average move for each day. Right, so what this tells you is SPY is only expected to move $4.25 in either direction on any given day. And there can always be some kind of event that would cause it to move more than that. But on a day like today, where there's no economic news, there's no economic events that are going on, that means that it'll probably stay within that $4.25 range. Right now, we're trading down $3.36 from Friday's open. So it's a little bit less likely that we're going to go down another dollar or so. But, given that Fed Chair Powell is speaking tomorrow, that could be a catalyst for the markets to sell off if they're fearful of what Powell has to say. So you can't just use this blindly and have no context for it. Dollar index is still going up right now. 0.71%. Really thinking about taking the gold hedge in case we're wrong about the markets being bearish tomorrow and the dollar pulls back. But I still want to wait until 3 o'clock for it. We'll Give it some patience. We're almost at the 173 low that we made on Friday. I would think that we'd be trading below it, but I guess with the Chinese balloon getting popped, that does kind of raise the stakes and increases the price of gold and precious metals whenever there's global tensions. But yeah, it's very tempting to open that gold position ahead of the Powell speech, and that'll just be kind of a hedge. I might hedge it as a leaps option rather than just a short weekly expiration, just because I do think we're going into a recession. I do think that global tensions are going to be continuing to rise over the next couple of years, so I'd rather give myself that extra time to realize some more profits on it. But looking at GLD, definitely a huge pullback from 182. Told myself that I would buy a gold chain with the leaps, with the profits that I made on my last leaps option, but I didn't make enough. I only made like $1,000 for the leaps option, which ain't enough for the type of gold chain that I would like. I want like a nice little thick 10 millimeter or so, like 20 inch or something like that. But that'll cost me a good, like at least $8,000, I think, something like that. But yeah, gold's not a bad investment, especially if you're thinking that there's going to be a recession and you think that the Russia war is going to keep escalating, and you think that the turmoil that we have with China is going to keep getting worse. Gold is definitely a decent investment for that. You can also look into defensives for these will usually do well in war. DFIN is a triple leverage ETF for defensives. So if you want to be a degenerate and trade the triple leverage, DFIN's a good choice. But if you want to be a little bit more stable, I would say Lockheed Martin, good choice. Boeing, another one. And Raytheon Technologies, RTX. Those are three good ones if you're expecting the global tensions to keep rising and more war efforts. All right, let's head back to SPY. Right now trading at 409.50, so we're recovering a little bit. So basically we bottomed out at the bottom of the pre-market range, and now we're headed back up. So basically we're range bound between 408 or so and 411. So as somebody asked earlier, when would I close it if we continued to trade flat? I would try to close it closer to 408. That's a huge candle right there, but we'll see if it sustains or not. Jeez, that is a huge pump. Not much volume coming from it, though. With a big candle like that, you would expect a lot more volume. A lot more volume behind it, but relative volume is not that high. Alright, let's see. Doesn't seem like there's a lot of questions from y'all today, but if y'all have any more questions, I'm here to answer them. But if we don't get many until 11 o'clock, and then we might just cut the session short by 30 minutes. But yeah, decent rally going on with this 5-minute candle here. 410.25. I think the call credit spreads I opened are back to break even. Yeah, I can pull this over here to monitor. Yeah, trading at 29 when I opened them at 29, so they're back to break even at the moment. All right. $131. Okay. All right. 830, 1080, 36. Oh, my computer's about to die anyway. Rip. Rip, 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 rip. But yeah, we could be making our way back up to that 410.79 mark again. That would be a triple top if we do get rejected by it. All right. Chat seems pretty inactive for the Q&A session, so I guess I'll head on off, and I will catch y'all tomorrow at 9:30. See everybody. Hopefully y'all have a great trading day.